We use a base whole life, very specially designed. We strip it down enough and take all the death benefit out of it, and we support the death benefit just because of the IRS requirements with term insurance. So Dave loves term. Dave, check this out, buddy. Like, look at all the term insurance we're using inside this contract. Dave, you said it. It's cheap, man. Look at all the term insurance. We do that to keep the internal cost down and the cash value high. And when we design it, this policy, okay, this is that whole life I'm talking about, we are basically going to have access to our money no less than 30 days after we make our premium deposit. Now, I don't know if any of you have ever had a whole life that even had cash value available in the first year, maybe not even the second year. Ours, the way they're designed, you have access to it immediately in the first 30 days or when your check clears. So now you can understand it's completely different. And how much money will you have access to? That depends. It could be anywhere between 60% of your deposit all the way to like just the two that I've designed the last 2 days have 95% available immediately. And what we're going to get into with what Russell's talking about is the next phase. So why would we ever put our money into this vehicle? Because everybody, watching before I even got out explaining what the heck this was, is thinking, I'm making more in REITs, I'm making more in stocks, I'm making more in crypto. Stop. Just stop. Stop thinking you know everything and just learn one additional thing and it could change your life. Yes, you're making more in stocks. Awesome. You're making more in REITs. Awesome. So am I. I'm making more in crypto. Like I bought crypto last week at 41. It's at 55 today. Like it's been a good day. Like not bragging. I understand that. But you see the difference between how I'm making money and how you're making money is I'm making money twice without doing any additional work. How many of you want to make money twice doing exactly what you're doing today, investing in what you're doing today, buying cars and all that stuff? You want to make money twice without getting out of bed? Then stop thinking you know what you think you know and start listening. I'm just here to teach you how to do that. And it's not complicated. And it starts with this. We put our money in this specially designed whole life because that's what the wealthy do. And you know who else does this? Traditional banks, folks. Russell, you work for a bank, right?
Yeah.
He works for a bank. They understand this because banks are the #1 purchasers of whole life in the world, I think. Look at Bank of America, Wells Fargo. They own more whole life than they do all the land and buildings on their balance sheet. Double check my math. It's absolute fact. Google, just go to Google and say, how much whole life do banks own? The first line, the first thing that comes up, Investopedia, $190 billion. Folks, I'm not making this stuff up. I'm just trying to open your eyes to say, banks are doing this, the wealthy are doing this. You're not, simply because you have never been shown how this works. So we already went over, we're going to change one thing. So let's just say you're saving money today. You're saving money. I don't care. Let's just call it $1,000 a month. You save that somewhere. Maybe it's going into a 401k. Maybe it's going into a savings account. Maybe you're putting it in a checking account. Maybe you got a Coinbase account for crypto and it's going in there. What if, just imagine this, okay? Just play along with this. What if all you did is changed one thing? You added one step. Before the money went into your investment, you changed where the money was housed first. Okay, hear me out. You just changed who holds your money. Right now, your money, chances are, when you make money, it's going into somebody else's bank. No disrespect, Russell, because I know you work for a bank, but it's going into someone else's bank. But what if we just changed whose bank held that money first? And what if we put it into this account where, and I got to be careful right now. So the current contracts as of today, which is October 6th, pay a guaranteed contractual 4%. That is changing. So come October 23rd or at the latest, November 1st, any of these contracts that are done after that date will be a lower interest rate. How much lower? I don't know. 375, 325 is numbers I've heard. It's going down. It is what it is, folks. Like the government came up with 7702. But today it's 4%. Plus we get a dividend, which is not guaranteed. See, I can put the big G behind the 4%, but the dividend is not guaranteed. But the companies, all of them that we work with, have paid dividends in excess of 100 years, some are 168 years, consecutively without ever missing one. Let's go one step further. So I'll put a number. Today, the dividend, the highest one that we do is 2%. So you're all in making 6% right here, of which 4 of it is guaranteed, 2 is not, but the 2% is the lowest dividend that company has paid in 31 years. probably longer, but I can only show 31 years. So now, if we just change where the money goes first, it doesn't go into somebody else's bank, it goes into your bank. And then we have the ability to then earn 4% plus the dividend on that money. We're doing better than what you're doing in your traditional bank. Now, hold on. We haven't got to stocks and mutual funds and REITs and crypto yet. So now once we put the money in, I said you can take that money out immediately in the first 30 days. But when you take that money out, and this is where Russell really, like, he's going to become your best freaking friend. When you want to take that money out. Now, let's just pretend, because somebody on here said that, let's pretend we want to take that money out and we want to buy a REIT. Your end destination for your money that you're saving is you want to buy a REIT. I wouldn't suggest it, but that's what you want to do. And let's just pretend that that REIT, forget about all this, that REIT is going to pay you 8%, okay, yield. Okay, and then if you got this REIT and you got enough money, they're going to give you a line of credit, which is basically a margin line. They're going to give you a margin line of credit, and you can then use whatever money you put in the REIT at, I don't know, what are those things? 2%, 1%. You can use that money at 2%. Believe me, I got a lot of wealthy friends that have these, okay? But you got to have a lot of money in the brokerage to be able to get this. So now this is the end destination. We got a REIT at 8%, and we then can use the money that we put into the REIT at a rate of 2%. Just don't get hung up on the numbers. I'm making things up. So if this is what we want, and this is where we start, check this out. Let's just say we want to take the money from our bank, the specially designed whole life, and we then want to move that money over to this REIT investment, wherever it's held, Schwab, TD Ameritrade, doesn't matter. How we would do that is we would take a loan from the policy. Okay, now this is a swear word. People are like, loan, oh, bad. I don't want more debt. This loan is a loan against your death benefit. This is a whole life policy at the end of the day. The death benefit is paid out when you die. Love it or hate it, okay? It's better than a sharp stick in the eye. So it's paid out when you die. So when you take a loan from your policy, the insurance company is just advancing you some of your death benefit today. They literally let you use your death benefit. And then what they do is they use your cash, let's call this 30,000. They use your cash value as collateral against the death benefit loan. That's what I'm going to call it for the sake of calling it. So your death benefit drops by 30 grand. You have a loan against the death benefit, but like, do you have to pay that loan back? When you go to a bank, okay, when you do a CV line of credit with Russell, you have to pay the bank back. They're not going to just say, hey, you don't have to pay it back. The insurance company says, we don't care if you ever pay the loan back because you're going to die someday. Sorry about the fact, like, I don't mean to hit you with a left hook there, but like, we're all going to die. So when you die, the insurance company just says, hey, cool, man, you never paid the 30 grand back. We're just going to subtract it from your death benefit. We good? We're good. Never have to pay that back. But there is a catch. To use that insurance company's money, to use your death benefit today before you die, the insurance company charges you an interest rate. Today, that interest rate is 5%. So before anyone gets their panties in a ruffle, I just want to kind of explain this. How much did I say that we're making? Roughly 6%, okay, with dividend, today's standards. If we're paying 5 and we're making 6 gross, okay, I'm not getting into the net numbers, but what is your spread? What is your arbitrage? 1%, okay, gross numbers. You're making 1% spread. Okay, so some people would say that's cool because I'm not even making 1% in my bank account. But see, remember, when we took the loan from the death benefit, one thing that didn't happen is none of your money, your 30 grand, came out of your account. Your 30 grand is sitting nice and comfy and cozy inside that specially designed whole life, still earning interest, still earning dividends, uninterrupted, and that will never change. For the rest of your life, whatever the premium deposits are that you put in here will never, ever stop earning interest and dividends for as long as you live. If you understand what Albert Einstein talked about when he said compound interest is the 8th wonder of the world, and then he went on to say, those that understand it, me and some others on here, make it. Those that don't, pay it. Albert Einstein, okay? You might think he's, a smart guy, good at math, but yeah, he was. And he understood this. This 30 grand will do one thing and one thing only for the rest of your life, and that will be go up. Even though we took that 30 grand out, let's just say we took 25 of it to invest in this REIT. So we put 30 in, we took 25K out of that specially designed whole life, which was a loan against our death benefit, and we put it into the REIT. but the insurance company is going to charge us 5, but we're making 6. So technically we're making a 1% spread. It's a good day in the office. Then my REIT makes 8%. I make 1%, but then, you know, the person on here came up with a great idea. They said, yeah, but then I can get a line of credit against my REIT at a lower interest rate, and then I can use this money again. Great. So then let's say we took the money out of the REIT and we invested that in crypto. How much? I made money once, twice, 3 times. How many more times could we play that game? I don't know. It's called infinite banking because it's infinite. So sorry, Russell, I didn't mean to stop you and go back, but now let's talk about something super fun. Some people watching this are like 1%, I don't know. Not even worth getting the medical. I don't know if it just wouldn't be worth my time to do that. I'm just going to take it and put it in someone else's bank and buy the REIT. Russell, if we just change who we use, whose money we use, and if Russell comes in and does the same thing that the company over here would do with your account, and Russell says, hey, we understand whole life. We're banks. That's what we do. We buy this. We'll give you a line of credit against your cash value. We'll let you use up to 100% of your cash value that's available. We'll call it 25 grand, okay, immediately. So we'll let you use all the cash value that's available. But instead of paying the insurance company 5%, what if we just charge you 3.25%? All things have remained the same, except for now we're using the bank's money. The bank, instead of the insurance company, is collateralizing their loan using your cash value. So Russell, correct me if I'm wrong, but it's kind of like a risk-free loan for the bank. The bank has 0 risk.
We love this stuff because it's 0 risk. The only risk is a company like Mass Mutual going under. And if Mass Mutual goes under, we got bigger problems.
Dude, I think if Mass Mutual goes under, all the banks have already died and been,
right.
insolvent. And Mass Mutual's just like, well.
Yeah, you're exactly right. We love this stuff.
So folks, like, we're going to get into the nuts and bolts, but first I had to take you on a journey. Okay. I had to take you on a train ride to show you kind of how the wealthy have used this. Biden might use this for his political campaigns. The Rockefellers probably used it to lend money back out. Instead of buying REITs, they were lending it out at 12% in banking or whatever they do. Doesn't matter. This is where their money starts. They replaced somebody else's bank with their bank, which has been called for a long period of time, privatized banking systems. You talk to a billionaire or a multimillionaire, chances are they're already using this. Every time I have a discussion with a very wealthy individual and I start explaining this, oh yeah, we know about this. Like, yeah, we know all about this. It's that thing, that thing, we use this whole life and we borrow from it. They all know about it, but they don't really understand it because they got somebody else doing that stuff for them, kind of like a lot of our clients. But they're all using it and you're just like, duh, of course you're using this. Why would I even think you wouldn't understand this? Well, no, I don't understand it. I just use it because that's what somebody said. They said, this uninterrupted compound interest thing works pretty cool. And hey, so far it has. But the ones that really understand it, the Rockefellers, the Rothschilds, the bankers, and many of the others, they use it at very high levels. So now, remember what I said before, we did the example with the 6, which you're making. And then we did it with the 5 with the 1% spread. So now can we just back into this? And now what am I doing this right? Is it 2.75? Am I doing my math right? 6 minus 325. I think I'm right. Yeah, 275. I'm good at math, but not the best. I'm not Albert Einstein. So we went from 1 to 2.75 and we didn't change anything. We called Russell and we said, hey man, I got these cash value whole life policies. They're worth about 100,000 in cash value. And Russell, he has a minimum, which you get into that, and he says, no problem. And he said, all right, well, let's do that. I'd rather borrow at 3.25 than pay 5. And Russell then sends you a packet. And you're like, oh, here we go. The bank's sending me over this application. It's going to take me all afternoon. And it's 1 page long. Was it 1 page or was it 2?
It was 1 page with a checklist that had 2 things on it.
Yeah, the checklist I just threw out. And I filled this 1 page thing out. And I remember thinking to myself, Russell, man, I feel like, I was like, Russell, I think you missed something here, bud. Like, you work for a bank. I think you forgot some pages. Russell, like, I got the 1 page all done, but like, isn't there something else? And he's like, no, just send that in. And then like 2 days later, he's like, yeah, you're approved. And I'm like, I've never gone into a bank and said, hey, I want to borrow some money with a line of credit, even if it's secured. And then the bank sends me a 1 page application. And then 2 days later, they say, hey, you're approved. And then as long as it takes to print the checks, they send you a checkbook just like this that is attached to all 7 of my cash value banking policies. 7 policies, 1 checkbook. They didn't even charge me for the checks. I can't even get my bank, you know, which I've had a relationship with for, I don't know, over a decade. I can't get them to give me freaking counter checks for free. They want to charge me when I walk in. Hey, I ran out of checks. Can I get a couple free? Oh, no, there's a charge for them. $1 each now. Okay, great. You son of a bitch. You just mailed me the checks. Like, and now I get to use my cash value, whatever it is, at a rate of 3.25, very much like, you know, like that person was saying over here with the REIT. But see, now I move the money from my policy into this REIT. The REIT pays me 8%. I'm making a 2.75% spread. And here's where I haven't got you really excited. I'm talking about the first year. Year 2, year 5, year 10, year 20. Guess what happens to this spread that you're making? It goes up, because guess what else is going up every day without you working any harder, any longer, taking on any risk or giving up any control? The compounding. Your balance can't go anywhere else but up. If you put 30 grand in, that 30 grand keeps growing. It can't not. That's just the beauty of compound interest. It's why the wealthy fully understand compound interest, but they also understand it's not compound interest I'm really after. That's just where it starts. I need to move my money all the time. I need to take money from my bank, buy REITs. I need to take my money and buy crypto. I need to take my money and pay for my cars. And I'm going to show you something wild. I'm just talking too much, but I get all excited about this stuff. I'm going to talk to you about how me and Shauna's on here yesterday, sat down with the, if I could show you, it's right there. We got one of those big copy machines, those big fancy ones that cost way too much money. And we've been leasing this one for, I think, for 3 years or whatever it is. And our lease was up. And I don't know why we leased. We just weren't thinking. And he comes in and he's negotiating the price of this machine. And he's like, all right, well, your lease payment's going to go up to, I think, $170 a month from $160, blah, blah, blah. And I said, okay. And all of a sudden it clicked. You know, sometimes our mind wants to drift back to the old way. Well, that's easy. 170. I can do that. We're paying 160 now. And I'm like, wait. Why would I ever pay $160 or $170 to someone else's bank? And then I said to him, I did the math. I added it up. I said, dude, so we're paying $9,800 for this machine? He's like, well, yeah. I said, what's the interest rate? He said, I don't know. Of course you don't. Like, they never know what the interest rate is on the leases. It's buried. Try to go lease a car and ask them, you know, hey, what's the interest rate? Well, it's a lease. I don't really know. Bullshit. The interest rate's like 8% on your lease. They're just trying to hide it from you. So we got down to it and I figured it out. I was paying a bunch of money in interest. I said, how about this? I said, what I want you to do, Mr. Copy Machine Man, I'm not going to give his name, go back and get me the best price if I pay cash for that machine. I want to pay cash for that machine. And this is cool, Russell, because you're gonna play right into this. I want to buy this machine cash. So I think it's like eight, whatever it is, 75 or 8, you know, instead of 96. And then what I'm going to do is I'm going to take one of these checks. I got the check right here. I actually should just start writing it out. And I'm going to write it out to the copy machine company to pay for that machine. And it's just going to come from my cash values of one of my 7 policies, doesn't matter. And I'm going to buy the machine. So we're going to have a brand new copy machine here, bought and paid for, nice and spick and span. And then what I'm going to do is I'm going to say to the bookkeeper, and it could just be anyone, I'm going to say, hey, can you set up $170 a month bill pay to me? That's right. The company for the copy machine, which we've been paying for 3 years, we just never got to keep any money. The company is going to write me a check for $170. You know what I'm going to do? I'm going to take that $170 every month, and I'm just going to pay that back to Russell, which is going to pay my line of credit down, which is going to make that money available, Russell. Instead of me saying, if I give you $170 on a loan that I've taken for $8,000, how much more money do I have available the day that check clears?
So if you give me $170 back and you use it to pay down your principal balance, it's available to draw again immediately.
Right. So every month my company writes $170. I just have them pay it right over to Russell's company, Coastal States Bank. And then all of a sudden I've got, guess what? $170 left to use the next day. And every month that 170 just goes on. You guys all know how lines of credit work. It's no different. Now let's get into the nitty gritty. What's the bad part about this? This can't be this good, man. There's no way it can work this good. Like those whole lives, there's got to be some downsides to them. And this line of credit thing. What are the bad parts about this?
To be honest with you, and I know it sounds sacrilegious to say something like this, I can't see a downside. To me, There's no fees to set these up. There's no early payment penalty. There's no cancellation fee, no fees at all whatsoever. It's interest only payments based on what's outstanding on the line of credit. And since there's no fees to set this up, this unlocks your life insurance inside of your financial plan. It opens up your ability to use your funds exactly how you want to use them when you want to use them. For planned events, for unplanned events, funds are available immediately whenever you need them.
God, it just sounds too good to be freaking true. There's just no way this can be real. Like, there's just no way an insurance company will pay me that guaranteed interest rate plus a dividend every year, allow me to use a large portion of that money immediately. And then I just have Russell with a one-page application, a few days of approval, and however long it takes to kind of get the collateral assignments and the checks back. And then all of a sudden I can just start using my money just like that. Yeah.
Exactly right.
One of our clients literally, and I think you've already spoke to him, you know, he's a doctor. He just set up his policy and immediately got an opportunity to literally steal. You guys all know the used car market's a little crazy right now. He got the opportunity to steal a Suburban, a Chevy Suburban, pretty high demand kind of vehicle. The price he bought this for was ridiculous. It was $18,000 for a new model Suburban. Like, you guys should be salivating. He'll sell that thing for 25, 30 grand overnight on eBay or Facebook Marketplace. And he's setting up a line of credit. So literally, you know, when he got into this thing and he called Russell, you know, Russell's getting him set up, he's just going to write a check and he's going to say, here you go. And then he's going to figure out with bankrate.com how much the monthly payment would have been with that Suburban if he went to a bank and financed it. And he's just going to make the same payment back to his bank. Because what does it matter what your payment is? Would it matter if I charged my company $300 a month for that copy machine? No, the money is all going back into the same place, my bank. If I was writing a check for $300 to somebody else's bank, now we got a problem. Now I need to negotiate that back down to that $170. But it doesn't matter when you're paying yourself back and the money's all ending up in your bank that you can use the very next day. You see the difference between what people do and what they should do is one step away from success. The biggest difference is we use other people's banks and we give up control to other people's banks or Wall Street or whatever you want to call it. If we just change where the money goes first, like the wealthy have and like the banks do with their tier one capital, this is the outcome. There is no gray area. You know, you guys that are analytical, that love to crunch numbers, crunch them away. I got the most analytical son of a bitch sitting right over here. Andrew, I love you, bud. But Andrew, that man can't just look at something and say, yep, that's exactly what it is. He literally needs to go in and like sharpen the pencil and just spend days crunching numbers to make sure that what we say is right. I know you're laughing, right? But how much time do you spend just pushing stupid numbers on those Excel spreadsheets that you think we're all going to understand? I take his Excel spreadsheet. He wants to explain them. I throw them away and I just draw it on the board like this because he's just very into the numbers, but he has not been able to punch holes in this. And we even did a video one time where we were literally trying to figure out, like, there's got to be some bad sides. And we went on a mission. Our whole team went online and we tried to find all the bad things about the infinite banking concept and what we do. And we found a whole bunch of negative posts, but then every time we got into them, like, oh, this is the one, or this is definitely negative. Nope. Like, they were all just propaganda. They were just, I don't know, people that thought they knew what they didn't know. What are some of the minimums? Like, how do people, I don't know how I'm ever going to get to all these chats. This is nuts. How do people actually like do this? And what are some of the minimums? And, you know, like, what would they do if they really wanted to apply this and use this?
Yeah. So, I mean, you can use these, they're your funds to use however you want. And I think you hit the nail on the head is what you just described and drew out on the board is how banks make their money. So it's what you described is allowing yourself to be your personal bank. I mean, it's all about the flow of the money. And when you've got the guarantees of the life insurance and you've got life insurance companies that are A+ rated that have been around for 160 years paying dividends, that's why we love this stuff, is because there's no risk in it to us. That's why banks own tons of cash value life insurance. And it's all about the velocity of the money, right? When you're doing the infinite banking concept. You take it out, you use it, and you put it right back in. But the whole time, the insurance policy doesn't know that there's a loan out there. It knows that the policy is collaterally assigned, but all the funds that you originally put into the policy are continuing to grow as if there was no loan out there. So it's an amazing tool. And I'll tell you this, this product's been around for, a little over a decade, and different banks. There's a few different banks involved and have programs. But I'll tell you, we started our program about just over 2.5 years ago. We started at zero. Our portfolio just hit $140 million.
Nice.
Love it. 2.5 years, $140 million. People love this stuff, and it allows you to use your money exactly the way you want and be your own bank. It's really a no-brainer, especially the fact that there's no fees.
And like some folks listening to this are probably like, you and Chris probably got together before this and planned this. Like, we didn't talk once before this. He just popped on. He had no idea what he was going to talk about. No idea what this show was even. We're just like, hey, come on to this show. And he just shows up. Like, so folks, like, you're hearing two different people talk about the same thing in two different ways. He's with the bank, we're just teaching you how this banking system works, but the story never changes. This is what banks use. Therefore, banks love this because they have this, they understand this. But I'm going to, Mike Tyson said, everybody has a plan until they get punched in the face. So I got to go to left field for a second because I have so much fun doing this. IULs, Index Universal Lives. These are the hottest things on the market, says all the brokers who are making 120% commission on the deposits. Like, they love these things and they're selling them like hotcakes. It's the greatest thing since the toothpick in the financial world. Like, IULs are so freaking great for everything. There's nothing that they don't do well. I'm elaborating, folks, but like, this is kind of, if you get in the space of IULs and you do any call or any meeting with an IUL broker selling you one of these, they will make you feel like this thing is the greatest thing. And whole life, all that boring old monster, that's like the freaking car that's rusted out in the driveway and doesn't even drive. That's old school. Like, this is the Ferrari. So if this is the Ferrari, Russell, someone brings you an IUL or a VUL, they can obviously get a line of credit on that, right? You'll just gladly just give them a line of credit on their IUL or VUL.
I'll be honest with you, we do not like IUL or VUL policies.
Damn.
And there's multiple reasons for that, but I like the way you kind of open that up, is because they're easy to sell. That's why they're the hottest product on the market. They're really easy to sell. But in my experience, and I actually came from the insurance business before I got into banking, and in my experience, you're not going to own an IUL for your whole life, because those mortality costs increase every year on an IUL. You're buying you get a savings account with a yearly renewable term policy, and it's really cheap when you're young and healthy. But as you get older and those mortality costs increase, you're going to want to switch to a whole life where you know exactly what you're going to put into it every year, no matter what.
Absolutely. So it's just kind of, all right, I kind of seeded that one, I'm not going to lie, but like, if they're the greatest vehicles ever because Mr. Broker or, whatever, Mr. Financial Advisor said it's the greatest thing, you sometimes should just take a step back and just say, well, why is it so good? And you should just say, why are all the brokers selling this when some other people like that aren't really selling anything are talking about this? Sometimes you just got to, disconnect from that sales moment, because that is a sales moment. We just had Joseph, one of our guys here, sit down with an agent here. I'm not going to use any names, who was selling him an IUL, and holy crap, Joseph left that meeting being like, dude, I thought I was like buying a rocket that was going to fly me to Mars. I thought this was going to be the great. I mean, I'm joking, but that's kind of like the way this guy was selling this thing. It's like, you can't go any wrong. But yet banks won't lend on a line of credit on those. And even if you would, let's just say, Russell, let's say me, I've got 7 policies with you, I think, or what, I think maybe we only did 5 of my 7, but we got 5 policies that you're doing a line of credit on. Let's say I have an IUL, but we've got a relationship. Will you give me anything on my IUL?
Yeah, as long as you've got as long as an IUL comes with other whole life policies, or you've got an existing line that's collateralized by other whole life policies, we will accept an IUL policy, because we want to accommodate clients. We know that sometimes they have different types of insurance, but the max loan to value on a universal life policy that we'll offer is 50%. And it's exactly for the reasons I just described. The increasing mortality cost, and, on an IUL or a VUL, you combine a couple of years of a down market, and you combine that with the increasing mortality costs, and say the client decides not to pay their premium for a year or two, that the value of that policy is decreasing significantly.
But you're only going to give me 50% of whatever the cash value is.
Yep.
And then for those of you that have looked at an IUL, you will understand that in the early years, sometimes the first 3 years or 5, depending on how much commission the agent wanted, which is truly what it is, that determines how much cash you'll have to use. But then there's this funky little thing in the contract called a surrender charge, which then inhibits how much money you can use. So you might put in 30, you might only be able to use 5, and then they're only going to give you 2,500 of that because they're only going to give you 50%. I'm not beating up on IULs. We got a great video that we're putting the final touches on, which literally is completely neutral, says the pros and cons of whole life and IULs, gets down to the contract level and really helps you understand it. For the first time in all of YouTube videos, there is not one other training like what we just completed. We spent about $4,000 to make this training and countless hours. Andrew's still slaving away trying to make sure that it's perfect to show you all what is the difference, which one works for what, and which one's best for you based on actual fundamentals, numbers, and math. So that'll be coming out soon. You guys will love it. One thing I wanted to comment on is Andy, if you're still here, you were saying this would be better with slides. Got you covered, buddy. I got lots of slides, but I just like drawing, man. Sometimes I got to get back to when I was a kid. I get to pencil things around and draw them. So Russell, what are some other things that people would need to know about these cash value lines of credit?
Some important things. And you touched it on the head. We've made the approval process as simple as possible for the borrower. I mean, you mentioned the one-page application. It might take you 2 minutes to fill it out on your computer. All I need is that one-page application completed and your current policy statement showing the current values of your policy in order to have you approved. I typically have people approved within 24, 48 hours with nothing crazy going on. And we're getting closing documents out the door within 5 business days. And so what I tell people is, to be safe, give yourself 2 weeks from actual approval to funding, but we're going to come in well under that 99.9% of the times. So there is an initial credit pool when we get the approval. And so the credit pool is to determine loan to value. So if your credit score is 750 plus, we'll offer you 100% loan to value on the total cash value of the policy or policies. If you're slightly below 750, above 625, we'll offer you 95% loan to value. So not a huge difference. 100% is unique to Coastal States Bank. The insurance company is not even going to let you take 100% of your cash value out on the policy. So that's something very important to point out. On the back end, once we get you set up, we're going to give you every way under the sun to access the line of credit. So the line of credit, I don't know how many people have had a home equity line of credit against their house, but it functions very similar to a home equity line of credit. It comes with a free checking account linked to the line of credit that'll give you access to online banking with Coastal States Bank. And you can use the checking account as a pass-through to be able to move money in and out through online banking. You'll also get checks. You'll be able to write checks with no limit for the line of credit. And then for the last minute things that you need to get funds somewhere fast, we can send wires for you. And a little secret that I probably shouldn't give out is right now we're not charging fees for wires from lines of credit. So every way under the sun.
I didn't know that, man. Got to get you on that one.
Yeah. Every way under the sun to access these. Our goal is to make it as easy as possible for you to access these funds. And for us, because of the guarantees and the whole life, and because we know these A+ rated carriers, and we've got great relationships with these carriers, that's why we'll give you 100%. And we know once you set it up, you're gonna borrow against it. So you're gonna use it because it's so easy to use, and you're going to take advantage of that arbitrage. So again, because there's no fees, it's a great tool to have in your financial plan. To me, what I tell people is it's a no-brainer. If you've got $100,000 in cash value, it is a no-brainer to have available in your financial plan. Even if you don't have a use for it right away, eventually something's going to come up where you need fast money, and having that bucket of liquidity available that you can get to same day. Even so, if you take a policy loan from the insurance company, what does it take? 3 days to get a check in the mail? This
probably
to you same day. You can reach out to me. You'll get my cell phone number, and we can send a wire for you same day if you don't have a check available.
Oh man. And listen, like, here's the thing, we've known about cash value line of credits for years now. And, we never really talked about them. We just didn't fully wrap our head around. We're like, hey, we're trying to be the bank, not get the bank back in bed with us. But what I did is, I was talking to a very successful individual that I know, and we're talking, privatized banking, the infinite banking concept. He's using it, I'm using it. Literally, we're just going back and forth. The dude's like, I just bought a brand new Lamborghini Urus for my wife. And, we're talking cars. Porsches are his favorite. He's got a Panamera. And we're just using, all of it is being funded by his cash value line of credit. And then all of a sudden he starts talking about, his borrow rate. And he didn't tell me about, the bank and the cash value line of credit. He's like, yeah, I take the money from my policy. My rate is 3 or 3.25%. And I buy this and I buy that. And I'm like, whoa. I'm like, hold on a second here, Jeff. Like, his name's Jeff. And actually, if you guys will see him on my show, the Chris Noggle show, very soon, and learn who this gentleman is. And I'm like, what do you mean you're taking it from your policy at 3.25%? And he's like, yeah, I'm using my cash value line of credit. And he just said CV line at L.O.C. And I'm like, you mean like a home equity line of credit? He's like, yeah. He's like, all my policies, they're just funnel right into this cash value line of credit. So I'm like, wait a second. So my dumb ass is paying 5 and you're paying 3.25, and that's the only thing you did? And then I just asked the questions. Well, there's got to be a catch. Like, what's hard? It was so easy. And then another one of my clients did it. Gary, one of my favorite, best. All my clients are my favorites, but this guy's just exceptional because he just gets it. And he got a hold of you first, and he calls me up and he's like, it was so easy. It was a one call, one pay. You fill out some basic paperwork, and I got it. And I'm like, wait a second, it's already approved? He's like, yeah, I got the checks are right here. And I'm like, dude, Gary, come on, give me his number. And he sends me a text, and I called Russell, and I'm like, all right, listen, if I'm going to teach this to my audience, I have to be doing it, because I truly believe that nobody should be talking or teaching about something if they're not doing it themselves, and if they haven't fully used it to understand it. Like, I just think there's too many gurus out there talking about things that they don't even do themselves. It's like your financial advisor recommends you buy a REIT. Ask the financial advisor, can you show me the statement where you own this same REIT in your portfolio? Oh, I don't own it. Then why are you recommending that I buy? Oh, well, it's right for your risk tolerance and it's not right for mine. There's some truth to that, but you know what I mean? It's just like, when I was an advisor, I didn't always recommend things that I did myself. I might have even done something totally different than what the company told me to recommend. And I hated myself for it after I did it, but that's just the way it was. Walk into any bank. Nope. Again, Russell, I got to apologize before I say it. Walk into any bank, go into Bank of America and take all your money, literally just any money you got, just take it out of whatever banks you got, just take it all in there and say, all right, I'd like to meet with the premier, banking agent or the premier banking manager. Oh yeah, I want to deposit a lot of money with this bank. And they're just going to rush around. Can I get you a coffee? Would you like an umbrella? We have suckers. They say dum-dums on them, but we can give you any flavor you want. So you're like, no, save the suckers for some sucker. But yeah, just get me in this meeting. Great. I'll take a coffee, no cream. You sit down and say, listen, I've got a briefcase full of money, and I'm trying to find a bank to put this with, but I've been unsuccessful in finding a bank I really like. And the bank, the premier person says, oh, well, we're one of the biggest banks and this and that. We've got this service, that service. Every time you come in, we'll give you coffee and donuts and, whatever else you want. You're like, oh, that's cool. I love all that. But listen, like, here's where the other banks have failed me. So like, this is all I need. I'm such a simple guy. All I want is, with all my money, I want you to put my money in the exact same place this bank puts its money. Can you do that? That's all I want.
No,
Russell, will the bank be able to help you?
No, the bank will not be able to help you.
That makes absolutely no effing sense. That the bank can't and won't put your money the same place the bank puts their tier 1 capital. It is a broken system. But can we use banks in our favor if we know how to play the game? Yeah, we are right now. That's what Russell's here for. Like, I beat up on banks every day, but I'm using one because, hey, math doesn't lie. You guys saw the math. That's pretty sweet. Like, I just increased my spread, my arbitrage, for just meeting one awesome human being, Russell, right here, and working with him. So that's how this works, folks. And literally, like, if any of you have policies already with the Money Multiplier, or you have policies not with the Money Multiplier, you need to get on the phone with them. Now, Russell, there are some minimums. I know we kind of hit it, but let's just hit it one more time. What are the minimums to work with Coastal States Bank for cash value?
Yeah, so our minimum line amount is 100,000, and you know, if you give me a second, I'll go through the tiered rates again, so everybody knows what they are and is aware. So we currently, from 100,000 to 250,000, we'll offer Wall Street Journal Prime minus 50 basis points. And from 250 to $1 million, we'll offer Wall Street Journal Prime minus 1%. And from $1 million and up, we'll offer Wall Street Journal Prime minus 1.25%, all with a floor rate of 3.25. So Prime currently equals 3.25. So everybody, whether you got a $100,000 line or $10 million line, is borrowing at an effective rate of 3.25 today. But let's say, you know, for example, I think I used it before, a $500,000 line. That means that Prime would have to climb above 4.25 for you to move off of our floor rate of 3.25. And I'll be honest with you, we do have fixed rate options that we haven't really marketed. We've gotten them approved. I don't recommend them. They're tiered just like our variable rate options, but they're going to be higher. And I'll tell you what they are. For over $1 million, it'll be 3.9%. For 250 to $1 million, it's going to be 4%, and for 100 to 250, it's going to be 4.10%. So I recommend taking advantage of the lower variable rates with the aggressive spreads. But for those people that are concerned about interest rates skyrocketing here pretty soon, we do have fixed rate options. I'll throw that out there. We don't really advertise them, like I said, because they're not that attractive just with where rates are today. And again, I don't want to get too far down in the weeds. I would expect interest rates to start to tick up a little bit 2022 towards the end of 2022. But, with the environment that we're in, can't raise rates that fast. I'll just say that. That's my opinion. So I recommend taking advantage of the aggressive rate spreads we offer on the variable rates.
Yeah, and I will double down just with all my knowledge, and believe me, I'm a nerd when it comes to this stuff. If the government raises rates too fast, they will collapse the entire system. They know this. Follow what Japan did. They got themselves into a very same predicament, or actually US is in the same predicament Japan was. They couldn't raise rates. They were in stagflation because they could not raise rates. They literally backed themselves into a corner. The US has done the same thing. And I don't know what the answer is, how they're going to get out of it, but you are going to be in an incredibly low interest rate cycle for quite some time. And it'll just be catapulted when the whole stock market crashes and burns, which all of you REIT lovers or stock lovers, beware. If you weren't on the 3-day to hear from Harry Dent Jr., one of the leading world economists, who also resonated all the other economists that, would like him or hate him, they're all saying the same thing, folks. These are the people that literally, usually they have glasses, they never have sex because they don't, I don't know, that's what he said. They said, economists are a rare breed, but these are the people that the world listens to predict patterns and what's going to happen. And he literally outright said the markets are going to collapse. He even said it could be as much as 85%, but he's not the only one. Jim Rickards is saying the same thing. Read his books. He's a famous author. All of them are pointing to the same thing. And that is, and actually you just heard the government kind of say that a little bit. They're hinting there's something coming. The storm is coming. So just beware, folks. What we're talking about, this stupid, boring whole life thing we're talking about, that's guaranteed. Your REITs, your stocks, your crypto, not guaranteed. I love that you're making money, and kudos to you. Pat yourself on the butt, but just remember Warren Buffett's 3 rules. Buy low, sell, keyword, sell high, and then don't lose money. Don't buy high, sell low, and lose money, which is what the average person does. I hate to say it, and everybody's like, no, we don't do that. I'll give it some time, and we'll prove that yet again, just like we proved it in 2008, like we proved it in the dot-com crash. Shall I keep going? Because we just don't have time for that. Stop following the herd and doing what everybody else does. Get on your own path, get control of your money, and be your own darn bank. And all of a sudden, things just simply make sense. When the loan starts, is it based off the day's cash value or based on the 5-year term of the policy, does the bank take into consideration that you have incoming payments over the 5 years of, so what Sean is basically saying is like, when you get this line of credit, what is the line based on? Is it based on that day's cash value, or is it based on the end of the year cash value? And the next year, when I put an additional premium deposit in, like, am I still locked into last year's numbers? So I'll let you hit that one.
Yeah, that's a great question. So we don't want to use the annual. It really depends on the insurance company and how they credit the cash value throughout the year. But the annual statement's not what we're looking for. We're looking for the most current, and they all call them something different. We'll look for a policy verification letter from Mass Mutual, or Guardian has a policy status report. Penn Mutual has a policy summary. Whatever the current shows, the current values as of that day is what you're going to want to use. And that's what we'll use to originate the line. And then we offer line increases at no charge once a year for clients. It's not an automatic thing. It's you'll have to request that yourself. And what you'll do is you'll see if you end up applying and setting up the line, it'll be the same one-page application to request the line increase. There's a box in the top left. You just check the box for line increase, write in max available, send that in. That'll be my trigger to reach out to the insurance companies to get updated statements for your policies. And then it's a 2-page loan modification document that we send out via DocuSign to increase the line. And that brings me to another point, is we close all of these lines of credit via DocuSign. So we want to make it as easy as possible on the borrower to set up the line and get access to it as quickly as possible.
Amazing. All right. So with that, I'm just answering some people are like, how do I set up one of these awesome, privatized banks? Well, that's all we do, folks, at the Money Multiplier. We do nothing else besides banking and set these up. So we certainly can help, but we do ask. We've got kind of hit some things high end, and I got some slides for Andy that I want to put up in a second just to kind of get it a little closer so you guys understand it. But that's all we do. We do require, it's a prerequisite that you watch a 90-minute video or a 10-part video series, which you can find at chrisnoggle.com. So I'll put it in the chat. So it'll be right under Russell's, chrisnoggle.com. And you can just go there. The 90-minute video will pop up. You can get both of my books for free. Mapping Out the Millionaire Mystery teaches you about this. And hey, if you guys want to get all the money back for all the cars you're ever going to buy, drive, and own, this booklet, 63 pages, super big writing, lots of graphics and pictures, teaches you how to get all the money back for all the cars you ever buy, drive, and own. And I think I'm going to have to rewrite that book, because I'm going to rewrite that book showing the actual numbers using a cash value line of credit. And then you'll look at the numbers and be like, that can't be real, but it is. So that's how we do it. And we're trying to keep up with the chats here. They're coming in hot and heavy. Russell put his number and his email, but I bet you guys are like, oh, where's his number and email? Because it was gone. It vanished because of the chats coming in. All right. So this one is, I love this question. Juan said, are policy loans reported to your credit? Like if I borrow from a bank, it hits my credit score. Like, are these reported? I love this.
Yes. So that's a very important point. Yes. So for individual borrowers, there's 2 ways to set it up. If you don't want the line of credit to be reported to the credit bureau and show up on your credit report, you're going to want to designate the line to be for a business purpose. So you'll see on the application that you'll check the box for business purpose, and it's going to ask you for a type of business you expect to use some or all the funds in. We just have to designate a type of business. Most of my clients are designating it as real estate, because most of my clients are using it to invest in different real estate investments right now. But you got to designate it, but they're your funds to use how you choose to use them. It's your cash secured loans, so they're your funds.
So we have an option. We can either do the line of credit and use it for business like copy machines, real estate, and all that good stuff, and then not report it to credit, or you can just do it the old way and just say, hey, report all of this to my credit report, because they just love that stuff. Sorry, right. I'm just smiling.
Exactly. But it really depends on the preference. I mean, so if you're if you don't carry, if you're paying off the balance pretty quickly and you're not carrying a big balance on the line of credit, it could help your credit score if you want to try and bump up your credit score a little bit. So it's something to think about.
That's true. I never thought about that.
Yeah, most of my clients, I'll tell you, are designated for a business purpose. They want it to function kind of like a policy loan. It won't show up on your credit report.
Awesome. Awesome. All right. This next one's another good question. Oh, also, Juan, I just want to go one step further. If you take the money, like the loan from the insurance company, nothing in that system is ever reported to anyone. You don't get 1099s at the end of the year. You don't get, the loans never get reported. It's called privatized banking. Okay. It's not a made up number. It's private. Imagine that. Something that the bank doesn't ask for every transaction over $600 on. Oh, wow. They never, ever ask you anything that you do in your private banking ever. No reporting at the end of the year. All the money you make inside the policy. If it's structured properly and it's not a MEC, tax free. Oh, and I forgot to mention, in most states, these policies are protected against judgments and liens. So you in a risky business, you a surgeon, an anesthesiologist, where you carry high levels of risk and make a lot of money, this isn't such a bad place to put your money because it is protected against judgments and liens. And then we never hit the fun part. You know, someday when we graduate, like no matter how much money we take out of our policy, no matter how much we use, someday when we graduate, there's money paid to our beneficiaries. Magic. It's self-completing. Like the Rockefellers, why do you think they get wealthier each generation? It's because they die. Oh, well, if they die, how does that mean they get wealthier? Because an insurance company writes a ginormous check to the trust that funds the next generation to keep growing the family legacy. The banking institutions, whatever the hell they do, a lot of bad things these days, I would assume. But do you get it? Like this is just how it works.
Yeah, I think you hit the nail on the head. One thing we haven't really talked about are the tax benefits of owning whole life insurance.
Oh yeah, no, I didn't hit that.
I mean, that increases the rate of return on the guaranteed rate of return on the policy.
Oh, dude, I love that you just hit
it up right. And one of the things that you know, I'm not a CPA, so I'm not allowed to give tax advice. But if you designate the line for a business purpose, it's on you to account for how you use the funds for that business purpose. But if you get with your CPA and say you use it for a real estate investment, you account for how you use the funds properly, the interest expense on that portion of the funds can be tax deductible.
Yep. So folks, when I do this copy machine, I'm going to lend the money, whatever the price of the copier is, it's called $8 grand. I'm going to lend that to Money School, and I'm going to do a promissory note. It could be a one-page promissory note. I, Chris Noggle, lend Money School $8,000 at a rate of 6% for X amount of 5 years for the term of the lease, and the payments are going to be $170. That just literally goes in a file. That's it. And then I do that. Now, that money that pays back to me is tax deductible to Money School. That's 6% interest. And then, so I'm making 6, and I'm just using simple numbers. This is tax deductible to Money School, my company. That 6% then is paid to me. That 6% is taxable to me. But then what I do is I got to give 3.25% back to that greedy coastal states bank, just joking, that coastal states bank, that if you have a good accountant or know how to do this, is a tax deduction as well. It is an interest expense. So I take this, I subtract this. Yes, I pay tax on the difference. But my accountant's pretty good and figures out somehow where like that happens. You guys should have been at the 3-day to learn from Solomon how that actually works, because at the end of the day, there's not a whole lot of taxes. Pretty awesome. You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you've felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com. Answer, Eve, to confirm my thought, if a loan is on our whole life policy, we would need to pay it back to get cash value line of credit, right? Oh, no. Yeah, why don't you just use mine, Russell? Tell them like what I had. How much? God, I had over 100,000 in loans on my policy.
Yeah, I think you had around over 100,000 in loans. So a lot of what I do is refinancing policy loans. So if you have at least $100,000 in cash value and you have a policy loan on your policy, there is no reason why you shouldn't be reaching out to me right now. I will refinance that policy loan all day long. We'll pay it off as a part of closing, and you'll be able to draw whatever's available on top of that from the line of credit.
There you go. Like I didn't pay my loans back, Eve. He paid them back. So I literally, just like your house, right? If you got a mortgage or a higher line of credit that's like 5%, and you're like, hey, I can refinance you at 3%. Like you're going to do that because, hey, why wouldn't you save that? That's what he did. I literally went from paying 5% down to paying 3.25 like that. So great question. Great question. Eric said, how does it all get set up? I'm in the process of setting up my first policy and I have no idea what to do after that. So Eric, if you're setting your first policy up with the Money Multiplier, the next step when you're approved and you make your first deposit is we're shipping you off to our mapping team. totally free. We have an entire team with an entire tool system that is going to build out your map of how you want to use this. When you talk to the mapping team, what you're going to want to do is say, hey, just so you know, I'm using a cash value line of credit, and they will know instantly. They will just change your map to reflect, instead of 5, they'll reflect at 3.25 through Coastal States Bank. Oh, and also a lot of you are thinking, well, what if I don't have a policy that has 100,000? Now, I don't mean to do this, Russell, like they start at 100, but we have a bank that actually will start at 25 if you want that. Russell's definitely the easiest and the best to deal with and most knowledgeable, but the other banks, if you need to for lower policies or lower cash values, we do have solutions for that as well. And Russell, you guys have to be paying us something. These people listening to this, they got to be thinking, oh, there's some kickback. Are you writing checks to me or Money School for this?
No, not at all. In fact, Chris, I think we met like 2 months ago, maybe. I mean, no relationship at all, just met. And Chris said, I've got to try this. And we set it up for Chris. And I think you would say that it was a pretty smooth, easy process.
Yeah. Like they're not giving us anything to have them on here. Listen, folks, the reason Russell's here, the reason we're talking about it is I'm always trying to find ways to make you more money. There's no hidden agenda here, folks. Like they're not paying me to be on here. They're not paying me every time you set up a line of credit. That wouldn't be bad, but that's just not the way it works. They're on here because you need to know this. This is how I'm making more money and how my team is making more money. So why wouldn't I share that with you? Like, why would I ever hold something? If I had the cure for cancer, I wouldn't hold it or try to profit. I would just give it, because in the universe, the universal law is if you give, you get. I am living proof. You guys listen to my story, watch the 90-minute video, see where my life used to be. See how many times I rode the financial hamster wheel just playing the traditional game. I've crashed and burned enough times to make all of you cry for me. Don't. I then figured it out, and I learned that the secret is you give first. You give first. And no matter what, the universe can do nothing other than give back to you. Yes. Will some of you start policies? Yes. Will we make commissions? Yes. Very small commissions. Per 10,000 in deposit into your banking policy, we make roughly about $387 to $487. That's the range. Do you think that is getting you excited? No. And it doesn't get us excited, but we do that for thousands of people. So do you think we get excited about making $387 on 3,000 people? Do the math. You guys can figure that out. Yeah, it's pretty sweet. It pays for a big office. It pays for, lots of staff, and it pays for us to do some really cool things like put vinyl on the walls to make it more appealing and cool looking for you. Sean said, I'm looking at my policy and I have no idea if I qualify. How do I know if I qualify? Sean, real easy. Call Russell.
Yep.
There you go.
You can call me.
Peter said,
to talk through it with you. And Chris, along the lines of what you just said, the reason why Coastal States Bank launched this product, the reason why I was so excited to get involved with the product is because this is one of those deals where it's a win-win-win for everybody involved.
I agree.
And for the bank, because we're collecting, we got zero risk loan out there that we're collecting 3.25% interest on. It's great for the agent, the life insurance agent, because it protects his book of business. Because a lot of times what people do when they take out policy loans is they'll let that loan accrue in their policy and they won't pay it back, and they'll end up surrendering the policy. So it protects the agent's book of business, and the insurance company's happy because the money's back in their general fund, invested the way it should be invested. So everybody's winning in this scenario, and that's the kind of scenario that I wanted to sign on to. So that's how I got involved in this.
Do we contact Russell for the policy? No, Russell, you don't write policies, do you?
No, I don't. I'm not affiliated with any insurance company.
Yeah. Perfect. So you contact Russell to set the CV line of credit, the cash value, that's CV line of credit, because that gets Thomas's question right out of the way. And he'll set that up. So if you're working with Gabby, Stephen, Devin, Joseph, myself, setting up a policy with the Money Multiplier, we'll get you all set up there, get you into the mapping when you're all approved, and then we'll basically help you get hooked up with Russell to do what you need to do to get the cash value line of credit done. All right. Mark said, do you loan against a portfolio of precious metals? If so, is there any difference on the terms? That's an interesting question.
I'm not sure I understand what's being asked there, to be honest.
So like how I would anticipate, or how I would articulate this question is, you'll lend against cash value in a policy. Will you also lend against gold or silver or precious metals?
I mean, yeah, I think I would say that would probably be like, any other margin loan that's out there. I don't personally do that. I think we would take a look at it and possibly do some type of mortgage loan against it. But again, 100% of my time is kept up with these cash value loans. I mean, I'm very, very busy with cash value loans. So I could refer that to another banker I work with. But yeah, I mean, it's a possibility. We're always looking at different things to loan against. But the reason why we love the cash value loans is because the guarantees, we know these insurance companies, we can give you 100% of the cash value because we know the money's going to be there. Once it's in the policy, the money is there and it's going to continue to grow, period.
Mm-hmm. No ifs, ands, or buts about that one, folks. So Tricia said, interest in, I love this. Trisha's probably like, wait a second, this is too good to be true. She said, interest and dividends are paid based on the 30,000, even though you took out the 25. So here's what she's doing. She's wait, my bank, if I put 30 in and I take 25 out, my bank's only paying me interest on the 5,000 left, but you crazy bastards are paying it on the full 30. Yeah, the insurance companies are pretty crazy because they're doing that. Actually, they've just figured out how to do it. It's not very complicated. So Trisha, we just put up a thing. Watch the 90-minute video in the chat and then book a call because the 90-minute video will make it crystal clear how this works. That's how I learned this, by watching a 90-minute video. And then from there, then I booked a call with Russell after I was 7 policies deep and he hooked me up with this. Liz said, what companies do you work with? Guardian, Mass, One America? Wow, Liz, you've been paying attention. Yes, all but Guardian. We don't use Guardian yet. They're a great company. If you're working with somebody that's doing a Guardian banking policy, good for you. Just understand Guardian is a direct recognition company. So you are going to need to work with Russell in order to get that compounding effect on the full value, even when you take loans. We only use non-direct recognition companies, Mass Mutual, Lafayette, and One America, where they pay dividends and interest, whether the money is in there or whether you took it all out in loans. But with the cash value line of credit, that's the best thing. It doesn't matter if it's direct or non-direct because the bank is taking that on. Like your money never leaves your account and there's no loans by the insurance company. So it's a beautiful thing. I would say probably in the next couple of months after the 7702 kicks in, you will see us using Guardian in rare occasions. Stacy said, what are your tax implications when using for business? Can I make regular deposits to the account, not part of a loan payment? Can the whole life protect my business's line of credit? What bank does Russell work for? Coastal States Bank is the bank that Russell works for. Okay, get that one out of the way. My computer just froze. There it goes. But Stacey, got a lot of questions. Number one, I can't give tax advice. You'd have to ask your CPA how he would take deductions. But can you use this in your company? Yes. I'll give you an example. We have a big development company that we're setting one up for. It would be considered a COLI, company-owned life insurance. We took one of the partners. We're doing a policy on him and doing another policy on the other partner. So both partners in the company are getting a policy. And that policy is going to be owned by the corporation and funded by the corporation. So what the company's doing is they've got a bank account which has lots of cash in it. They're just going to basically carve out some of their working capital that they don't use every day to pay bills and move it down to this vehicle. Then what they're going to do is when they buy real estate, they're going to only use this vehicle, their private bank, to then fund the real estate so they get the uninterrupted compound interest. They're not going to use this vehicle to pay for, utility bills and, all that. They're going to use this to pay maybe property taxes, buying additional equipment, buying more real estate so that they can do this. You can do it the same way. Hopefully that answers all those questions.
Edwin said, you bring up a great point. We will do business. We can take corporate owned policies as collateral. It's different one-page application. It's actually easier to fill out than the individually owned one-page application. But we do have, it's a little bit different process in the fact that we do have to underwrite the business since it's a commercial loan. So we'll ask for the documentation of the business. Obviously, if it's not just a single member, we'll need the articles of incorporation, the certificate of existence, just the basic business documents. And typically we're going to ask for 2 years of tax returns just to make sure it's a viable business. But that's all we need, and same approval time and same approval, same closing time.
Awesome. Let's see. We already hit that one. What is the minimum? It's 100,000 to work with. Coastal States Bank. We have one bank that will go down as low as 25. Anything less than 25, we're just borrowing from the insurance company. Juan said, does bankruptcies in your credit report affect the approval process? Yeah, I mean, it would drop your rate, but wherever your rate is, you're just going to maybe not have 100% access to all your cash value. It might drop a little bit from there and your rate could go up. Oh, this is a good question. Jameson, is the 3.25% simple interest?
Yes, it is. Simple interest and the payments are interest only. And that's the key. When I tell people is from a policyholder standpoint, it is in your best interest to just cash flow the interest on these loans. To the low interest rate, cash flow the interest, and that keeps the loan from growing and eating up the cash value of your policy, right? And that's what typically happens when people take out a policy loan. It feels good because they don't have to pay the interest. They can accrue it in the policy. But what ends up happening is that loan keeps ballooning and ballooning and ballooning because of the law of compounding. And when they get up against a wall in their policy, it's a lose-lose situation for everybody because they're not going to pay that loan off. Typically, they're just going to surrender the policy, and then there's huge tax consequences of that. So that's why the line of credit comes in. It's a great tool because it's an interest-only payment. You cash flow the interest every year. The loan stays the same. It protects your life insurance and keeps it growing for you. And there is no risk of surrender or lapse down the road.
Man, great answer. And somebody was just saying, should I pay the interest back every year? Like referring to the insurance company. Listen, if you owned a bank or you owned a grocery store, would you steal from your bank? Would you steal from your grocery store every day? Would you just go in and take all your groceries and never pay for them? Would you go into your bank and just take loans and just say, hey, I own the bank, I'm not going to pay it back? If that's you, don't do this. Please, this is not a good fit for you because you are a thief. You would steal from your own business. You would steal from your own bank. Don't do this. We teach people how to be honest bankers. If you own a bank, treat your money the same as you would treat the bank's money. Never, ever steal the peas. That's straight from Nelson Nash's book. Love that. Aaron was asking, blah, 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 blah. He's going to figure out a policy. It's got cash value as long as he hits the minimums. Can I get a hold of Russell's bank? And he writes me, he's not writing you a policy. He's writing you a cash value line of credit on the policy. Yeah, absolutely. So how much money do I have access to? So whatever your cash value is, so go log into whatever company we got you with, Mass Mutual, Lafayette, One America, and just look, it'll say cash value, surrender value. That's how much money in year one you'll have access to. Next year, when you put more money in, they will review it again. You'll send them a new report. It'll reset and it'll keep going up. If for some reason, like you have cash value and you do like an odd dump in, you overfund your policy, send them the new one. How many times will you look at a policy's cash value in a given year without a cost?
How many times will we look at the policy's cash value in a given year?
Let's say somebody has a policy, they set up a line of credit, they got 100 grand, but then they dump 50 grand into their policies PUA. So now they've got 145,000, but it's the same year. Would you guys review that and maybe increase their line?
Yes. So we offer it once a year at no charge. Now, if you want additional line increases more than once a year, we'll do it, but we'll do it for a $500 fee each time, and we can roll that into the loan. So, I mean, for a significant line increase, $100,000, $200,000, a $500 fee rolled into the loan is nothing in my mind.
Absolutely. Wes had an interesting question I'm going to answer offline, but he said, so I got 100 grand in the IBC. I take the loan, or I take the money from the cash value line of credit I invested in the REIT. Then what I do is I get the line of credit, the margin line on the REIT, and I take that money and I lend that money out as a private lender at 12%. Isn't that a great way to compound 100,000 at 3 times? Absolutely. Just one thing that scared me in that, REITs. They're scary. If you really understand them and you look at them, you should really look at the past. Like go back and see what happened to REITs, and how they perform. Don't look at the average rate of return. If any of you have been around this campfire, I've explained actual versus average rates of return. That should have woke you up. If you need to, go back and watch that because you need to see it again. So actual versus average rates of return are very different. So does this provide, is there any states you don't do this in?
No, this is a national offering. So we'll loan to anybody in the country.
Let's see. Lynette said, we have a line of credit at the bank. Would it be beneficial to switch to this one? Lynette, that's kind of a loaded question. It's one that would come with many different questions. I mean, what is your rate on your line of credit? What is it attached to? Do you have a banking policy that has 100,000 in cash value? And, if the math pencils right, like if 3.25 is less than what the bank is charging you on your line, absolutely, definitely. Yeah. But again, I think there might be some things we'd have to flush out there with that question.
Yeah, you can email me and we can take a look at it for you.
Yeah, exactly. Glenn, you were asking, how do we set these up? I'm just going to send you over. There's a 90-minute prerequisite video that you have got to watch. And then after that, you set up a call. So I gave you our calendar to set up the call. What is the minimum amount to start a policy? 10 times your age. I'm 44 years old. So 44 times 10 is 440 a month. That's the bare minimum for people that are 30 to 60. If you're under 30 or over 60, do your age times 15. That'll get you your minimums. Anonymous said, can you depreciate the copy machine like a farmer depreciates his tractor? Of course you can. Like it's business equipment. You can depreciate the hell out of that. Good question. Beautiful. Boy, look at that. That person's like, so I get all the money back for it, but can I depreciate it? Oh yeah.
The question is, can you cost segregate?
There you go. Yeah, thank you. Thank you. Let's get out of the depreciate and talk about cost segregation. Get yourself a good CPA, and I don't know what you can't depreciate.
Right.
Now, a G-Wagon out there that I own, I just appreciated the hell out of that thing this year because I needed a tax deduction. I never knew that existed. I think it's like 168 something. Whatever, leave that to the accountants. Can I combine my IBC policies to yeah, oh, absolutely. So Sonia, and I know Sonia, like definitely, like we'll take your policies like I did. I had 7. I used 5 of them and I combined them to basically one line of credit. So you might have one that's 20 grand, one that's 30, put them together and like, that'll get you to the level that you need to be at. Yeah, she definitely would be a great one to use this. Do you guys do lines of credit on indexed annuities?
Good question.
It is. I'm sorry, Lisa.
No, that's a good question. I get asked that question a lot. Our program is specifically designed for whole life insurance. Now, we'll accept an IUL policy at 50% loan to value as long as it comes with a whole life insurance policy. Annuities are a different ball game, and here's the reason why. Is if we ever get into a situation where there's a default or we want out from under the loan, it's not like a life insurance policy where we can reach out to the insurance company and switch the balance on the line and have the insurance company pay us out and switch the balance to a policy loan on your policy. Because we don't ever want to be in the business of surrendering people's policies. We want to avoid that at all costs. Well, if we collateralize an annuity and we get into a default situation, the only option is surrendering that contract if we want to get paid out. And we just don't want to be in the business of doing that. So the answer.
Absolutely. Anonymous said, so 2 payments, one for the cash value line of credit at 3.25% or wherever you come in, and one to repay the IBC loan. No. You're looking at 2 different things. Increase it. Yeah. So you're caught up in the fact that you think you're borrowing from the insurance company. Here, we're no longer doing this. We're borrowing from the bank, which in this case is coastal states. So when you take the loan, when you write the check, right? Let's use my example. When I write a check for that copy machine, $8,800 is basically coming out of my line of credit through Coastal States Bank. So $8,800 then goes over and I buy my copy machine. Sorry, the drawing's not that great, but that's my copy machine. Then what I do is they're going to start charging me interest on that $8,800 that I took. So what I'm doing is I'm charging myself $170. Let's get rid of some of this. Okay, I'm charging $170 a month, which is the same exact amount the copy machine's leasing company would have charged me, dollar for dollar. Then I take that $170 and I literally just send it back to Russell. When I first set my lines of credit, I had a bunch of repayments going back to my life insurance loans. Like every month I think, what was it? $1,900, $1,900 a month was going back to repay the loans on my life policy. So on my loans with my life policy. So all I did is I changed the direction of where they went. I just changed the bill pay. Or actually you guys set it up automated. They even make it easier. Unlike how I did it before, I just set it up with him where they just drew the money right out of the account. So I just set it up. So when I do this transaction, I will take the $1,900, I will call Russell and say, Russell, we got one more we got to add. And I will add $170 a month to my repayment to the line of credit. Because every dollar of this, just remember, every dollar minus the interest, every dollar of my recaptures is money I have to use the next day. So it's not like I'm losing money. Like a lot of people want to think, oh, that's an expense. That's just because that's what you've been doing your whole life. You've been spending your entire life giving up money for all your expenses and your debts to somebody else. Imagine if all the money you gave away to all the debtors in your life, imagine if all that money went back into your bank account, where would you be? Well, I don't know. Ibiza sounds like a really nice place right now. But anyway, you get the drift. Like that's how it works.
Yeah.
All right. Joseph, Russell, do I get a 1099? Oh yeah, great question. So does he get a 1099 at the end of the year?
Actually, that's a good question. We don't provide tax documents. So we provide you at the end of the year, if you want a loan summary showing the transaction history on the line of credit, we can absolutely provide that for you. but we're not going to provide tax documents.
Perfect. All right. So you're just going to have to track it yourself and just look at the statements. They give really good every month. Is it every month? I get a statement.
Yeah, you'll get a monthly statement. It'll show the balance outstanding, the interest rate paid. It'll break it down for you. And then if you really want like the loan summary for a month or a year or 6 months, you can reach out to me and I can send you a loan summary breakdown of all the transactions.
Perfect. Perfect. Let's see. I have a policy I want to replace with the new IBC policy, but I only have 20 grand in cash value. Can someone help me? Tabitha, absolutely. I just put the link up. Get on the phone with us. We have this happen all the time. People will have like an old UL policy or an old BUL policy that has cash value. They're like, I want out of that. I want into one of these ones that's designed for banking. It's called a 1035 exchange. 100% of your cash value can be brought over tax-free to this new contract built like what I just showed you, but you got to watch the video and set up a call with us. That's a great question, Tabitha.
You should always ask your insurance agent who's writing the policy what their commission is. Yes. I mean, that's a fair question to ask. Absolutely. And they should tell you, and they most of them will, you know, if they kind of gawk and be like, well, I don't really know. It's depending on a lot of things. They're dodging, they're avoiding the question. It's very simple. I can sit down in a couple seconds and figure it out on a calculator and get within probably pennies or dollars of what that commission is going to be. Ask them. Yeah. And if you're putting 10 grand into your whole life and they're making $5,500 or $9,000, they're not setting you up with this kind of designed policy, I assure you, because they will not be making very much. They're selling you a policy and not a plan.
Absolutely. They're selling you a life insurance policy. Nothing wrong with that. If that's your goal, if you're looking for life insurance, like that's awesome. Don't call us. If you want to buy life insurance, you want to buy term insurance, you want an IUL, you want a VUL, you want a UL, you want any of that stuff that's just regular life insurance, call somebody else. Call Northwestern, call New York Life. I'll refer you to some people. If you want a banking system built using this concept, this is all we do. Call us. And we put the number up there a whole bunch of times, folks, and it definitely will change your life. Charlie, I know I made you wait. I don't know if you're still on here, but can an IBC be implemented for someone that lives paycheck to paycheck? And if so, how? The answer off the simplest thing, no, because you have to be able to save money. But Charlie, we've worked with a lot of people. We've looked at, you know, Charlie, if you're living paycheck to paycheck, that means that you make money, but you spend every penny you make. So where we need to start is a budget to figure out where's all your money going? Well, how are you making paychecks? And then all that paycheck is going to somebody else. First, we look at that, where your money goes. Can we adjust that? Can we snowball that? Can we modify that to free up some cash so that then you can save? If the answer is no, I got bad news for you. If you hate living paycheck to paycheck, go out there and get a side hustle. Get a second job. Work on the weekends. Give up a football game and go out there and hustle your ass off to make a little bit of money to get out of that rat race of living paycheck to paycheck. There is no simple answer sometimes. Sometimes you got to rise above and figure out, how am I going to change my life? What do I have to do and what do I have to give up? And that's the answer in some people's case. This isn't magic. This isn't hocus pocus. I don't have a deck of cards. I'm not shuffling money. That's how it works. And also, Charlie, you should join us the next time that Jerry comes on to talk about the Resellers Inc., because that's $750 a month that you really don't have to miss the game to get. So that would be a good one. Stay tuned. But with that being said, Russell's got to run and I got to run. I hope you guys all enjoyed this. All right, if you like that video, make sure you check out this video right now. And also don't forget, subscribe to my channel and don't ever forget to smash that alert button. We'll see you on the next one.